In this video, I'm going to give you 10 ways to improve your trading for 2023. I guarantee you that you will learn something out of this video. Look, it's no doubt that 2022 was one of the hardest trading years for traders of all levels. Not only did we have the worst stock market since 2008, but every event, such as the Fed meetings or the CPI inflation data, really rocked the market in either direction. And of course, experienced traders love this type of volatility, but anyone would be lying to you if they told you that it was easy all throughout the year. So here are 10 ways to improve your trading for 2023. Number one, make sure your trading and investing accounts are separate, whether you use a different broker or multiple accounts under the same broker. Why? Because it is very common, especially for beginner traders. The greener that you are in trading, it's very common for your long-term holds to inform your trades or your trades to inform your long-term holds. If you're looking at a stock position that's down 40%, but you're also trying to improve your trades, it's very easy for you to look at that thing that's down 40% and lose confidence in your trades. When you are trading, you want to start with a clean slate. Remember that trading and investing are two different sports. So you might be holding a company for the long term. You might have high conviction in it. You might not want to sell it for tax purposes or whatever, or wash sale rules. But because you're trying to do some short-term trading, it's very easy to look at that long-term hold and be influenced by it. And you want to remove all unnecessary factors from your site when you are trading because you need every advantage and every edge that you can get. Number two seems pretty obvious, and I get this question all the time. Can I turn 5,000 into whatever? Can I turn 500 into whatever amount? And really, if you're going to trade or really do anything in 2023, especially if you're trying to buy assets or whatnot, but this video is solely about trading, you need cash. That means that you need a regular income stream. If you're just trying to babysit a small lump sum without bringing any more cash in and you're trying to turn it into something greater, guess what you're going to be doing with that small lump sum? You're going to be protecting it like it's your baby. And any amount that is lost from that small lump sum is going to start messing with your emotions. And then you're going to be making irrational decisions or just quit altogether. Nobody, and I mean nobody, got rich trading a small lump sum. You need the security of knowing that you have additional cash being brought in. Number three, here's where we start getting into some of the nitty-gritty of trading. If you have a strategy, make sure that it is back-tested, meaning make sure that it is proven, that it is ironclad. How do you do this? Well, go back and look at your trades. What is your win rate? What is your risk to reward ratio? If you don't have these statistics on hand, then take a weekend, go back into your account, look at every single trade. Was it taken with this strategy that you are so in love with? And what was the win rate and what was the risk to reward ratio for every single trade? A bonus to this is going back in time on something like TradingView, which is free. If you want an account, check the link in the description below and go over each time a stock has met your conditions according to your strategy. If you had entered a trade based on those conditions, would that trade be a winning trade? Number four, if you don't have a proven strategy or after backtesting you find that your strategy wasn't optimal, then here's what I want you to do. Get rid of every single indicator you have on your chart. They are useless to you unless proven otherwise. I would learn basic supply and demand, Fibonacci retracements, and learn about market liquidity. What happens throughout the market day? I've gone over this in previous videos before, but learn about what is buy-side liquidity, what is sell-side liquidity, why do stop limits often get breached, why you want to wait until liquidity is taken before actually entering your trade, as opposed to entering a long at support or a short at resistance. This was actually one of the highlights of our last mastermind call, was liquidity concepts. And after you have learned this stuff, then start digging for a strategy that matches your risk tolerance and your time commitments. There is no perfect strategy. There's only a strategy that works for you. I personally use a combination of drawing supply and demand, trend lines, Fibonacci retracements, as well as liquidity concepts. And on occasion, I will corroborate this with something like a moving average crossover. I also use volume profiles to help corroborate my thesis for my trades. I have backtested all of this relentlessly, and so far for 2022, I'm over 70% on my win rate for trading. Number 5 and 6 have to do with two of the most egregious violations that I see. Number 5 is learning how much to risk per trade. In general, you do not want to put up more than 1 to 2% of your portfolio's value on a trade. The more confident you are with the strategy, the more you can increase this. Yes, some traders can go 5 or 10%, especially on very high conviction plays with confluence. But from my experience level and my standpoint, you shouldn't even be at the 1% to 2% level if you haven't proven to yourself to be a successful trader? For me, being a successful trader is rather objective. Can you be profitable for 6 months straight? Number 6 also has to do with risk, and this is risk to reward. Are you measuring your risk to reward on every trade? There is a tool in TradingView that allows you to do this, whether it's for a short position or a long position. Where is your stop limit at, and how much are you risking to get that reward? For me, I will never take a trade that doesn't have more than a 1-to-1 risk to reward ratio, meaning putting up $5 to win a potential $5. In general, I like it higher than that, but that is the bare minimum. I only take A+ setups that have at least a 1-to-1 risk to reward ratio. This allows me to go even bigger on my trades, but trade less times. A+ setups are setups where all of my confluence boxes are ticked. So for example, is it at a trend line? Do we have confluence with the Fibonacci retracement? Has liquidity already been taken and the price retraced back into an area where I can then take a more optimal position? Number 7 has to do with your time and mainly what you do for a living. Does what you do for a living support what you want to do with trading? If you can't sit in front of your computer all day, then obviously you can't day trade at the moment. You might still take time to learn to set yourself up for when you are able to change your employment hours, but it's going to be really hard to be a successful trader if the time that you have doesn't allow for it. Now, when I have a career and I live on the West Coast, it was really easy for me to do a lot of my morning study and even trading early in the morning because on the West Coast, the market opens at 6:30 a.m. So I was up at 5:30 a.m. doing an hour of study. And then once the market opened, I had a couple hours to trade before I had to go to work. Then I would take lunch at 12, but I'd still be at my desk from 12 to 1, which is market close on the West Coast time. So I was there for power hour every single day, learning, trading, back testing, paper trading, etc. So if you have a day job that's really restrictive and won't allow you to trade or study at any point during the day, and you really want to trade, this is something that you really want to do, then you really have no choice but to either change your shift or even consider changing your job. It really just depends on your goals, but you have to make sure that your time aligns with what it is that you want to do with regards to trading. Another remedy that you might partake in is trading futures. Futures are open 23 hours a day, 6 days a week. I actually did a whole free tutorial on how to trade futures. You could check that out here. Number 8, and this really should have been further up the list, is make sure that your technical analysis is sharp. Trading and technical analysis go hand in hand. It's like dribbling a basketball and knowing how to play basketball. You can't do one without the other. You can't trade without technical analysis. It doesn't mean that you have to be a master chartist, but as I said before, learning how to draw support resistance, learning how to draw trend lines, and from my perspective, learning how to do Fibonacci retracements is going to be key. Sharpening your technical analysis is just as important as sharpening other elements of your trading. So make sure you get a free TradingView account and start ASAP. Do 15 or 30 minutes every single day. It's like playing guitar. Number 9, get a real broker. If you're still stuck on Robinhood or Webull, get a real broker that has a charting platform, that has an array of option strategies if that's what you're interested in. Even though I'm not affiliated with them, I tell people to get on Thinkorswim by TD Ameritrade. If you're outside of the US, don't worry. Yes, you're in luck. You can use interactive brokers. And the last tip I have for you is allow the chart to dictate whether your setup is still valid. Meaning, don't look at your profit and loss and determine whether your trade is still valid by how much you're winning or how much you're losing on the trade. If the chart still says stay in the trade, then stay in the trade. If the loss is too much for you to stomach, then guess what? You went too big on your position size. Just like today, we took a futures trade as of the time of this recording on the NASDAQ futures, and the chart setup looked really good. And even though I was up a lot on the trade still had a long way to go in order to meet my risk to reward ratio that I had set out before I entered the trade. Anyway, traders, we run mastermind calls every single month to go over these topics. We also talk about this every single day that the market is open. We are there from pre-market until after market close. If you want to join a vibrant community full of thousands of traders who talk about this stuff every single day, all hours of the day, and you want to be able to shadow our trades, how we're trading, what we're trading, check out the Academy. Link is in the description below. You also get access to tons of videos, the full options course, the full day trading course, etc., as well as the monthly Zoom calls with me. Hope you got something out of this video. If you did, leave it a big fat thumbs up. Leave it in the comment section below. Let me know how you plan to become a better trader for 2023, or if you have any questions questions on any of these concepts that I discuss, I would be happy to answer them. I try to answer each and every single comment. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.